it's really feared and triggered this potential global war, specifically with a lot of our allies. I mean, this article that we're talking about specifically calls out the United Kingdom, which is facing a 10% tariff on all goods and services pumped in. Like with all things, you've got, economists and analysts are really divided onto the extent that tariffs, what tariffs are going to do. There's really a bunch of schools of thought. So I'll try to kind of lay out the rationale for tariffs. Well, one is that we need to reciprocate. We need to be strong. What's going on, everybody? Welcome into the Monday, April 7th, 2025 edition of the Daily Energy Newsbeat Stand-Up. Here are today's top headlines. Tariff heavy, folks. Trump tariffs threaten UK and world economic stability. Unbelievable. Next up, EV batteries cost set to rise sharply amongst Trump tariffs. I will then jump over and do a complete round robin covering everything that's happened in the past, 72 hours in the oil and gas markets. We'll touch a little bit on rig counts but really just kind of attempt to wrap our minds around what's going on in the oil and gas markets. Guys, as always, I am Michael Tanner. Stu is out on assignment. I'm actually going to be on a little R&R vacation this week, so I will be back mostly out of the saddle. So you'll see Stu most of the week. I'll try to be on the show tomorrow, but really Tuesday, really Wednesday and Thursday, I will be out of commission, getting a little R&R. Who knows if we'll even have a job when I come back. So what's going on in the markets, guys? So stick in there. Let's go ahead and kick us off. Trump tariffs threaten UK and world economic stability. I mean, this is what everyone's talking about. Newsflash, if you're living under a rock, tariffs are here and they've absolutely crushed the economy. There's a whole swath of tariffs. By now all we've seen the image of Trump holding up the sign, which basically says, here's what tariffs countries have on us versus what tariffs we have on it. It's really feared and triggered this potential global war, specifically with a lot of our allies. I mean, this article that we're talking about specifically calls out the United Kingdom, which is facing a 10% tariff on all goods and services pumped in. Like with all things, you've got, economists and analysts are really divided onto the extent that tariffs, what tariffs are going to do. There's really a bunch of schools of thought. So I'll try to kind of lay out the rationale for tariffs. Well, one is that we need to reciprocate. We need to be strong. I think this is probably the outward message that the Trump administration is giving is we need to be strong. If someone's going to have a 25% tariff on us, we're going to need a 25% tariff on us. It's a way to raise revenues in the United States without necessarily increasing baseline taxes on folks, which, the argument against that is that obviously a tariff is a tax. But beside the point, that's option one. Option two, and this is where it's not as outwardly shown, but the underlying maybe second reason why these tariffs are coming down the way they are has to everything to do with lowering bond yields. And basically, we have $19 trillion of debt that needs to be refinanced in the next 18 months. We would like to do that at a much lower interest rate, try to save ourselves some money in the era of Doge. Why not try to see if we can save some money? One of our biggest expenses is interest expense behind, obviously, Social Security and defense spending. Interest on the national debt is big. It's like over $1 trillion. Maybe we can refinance some of this, get that number down. Now, the problem is they're not coming out and saying that. I mean, if that's the reason, I'm okay with that, I guess. Now, are there other ways to go about it? Maybe don't rack up debt in the first place, but you're kind of dealt the cards you have and you got to play with that hand. So if that's the reason, why aren't they coming out and saying it? And that just all comes back to my overall philosophy is you shoot people straight. People should just tell people. Don't hide things. People are smart. U.S. people are smart. They'll understand this. Most people don't actually have stocks. Yes, they have a 401k, so they are exposed to the markets. But tariffs in their mind lead to taxes. So if you're going to increase prices at home because of tariffs, which again is fine, you should probably be honest about why you're doing that. And in the long run, this will be helpful. And, I'm the first to say, I have no idea what the outcome of tariffs are going to be. If you listen to CNBC, Jim Cramer, they're losing their minds right now because, again, everything just goes onto the stock market. You look at the S&P 500 chart, if it's not pointing up and to the right, that's not good. If it's pointing down and to the right, that's really, really not good. So I think from that standpoint, I think you've got a lot of people that are nervous about what's going to happen. Obviously, if you listen to stuff coming out of the Trump administration, this could be great. But I think the easiest thing to say is I don't know how these tariffs are going to play. Now, what this article does go over is specifically the United Kingdom's approach to what's going to happen. But the what you're seeing is these finance ministers, specifically in the UK, are fairly concerned in the fact that they believe that this is going to cost them tens of thousands of jobs. Obviously, this is going to bring other countries to the negotiating table, and so I guess the real question that remains to be seen is, okay, what then exactly is that negotiation going to look like? Because, okay, great, you've now driven stocks to this point. I mean, we're under 5,000 now on the S&P 500 futures. I don't really know what the outcome is going to be, but really what this article does is just dive in specifically to the United Kingdom and stuff. I recommend reading it. They definitely say that there is a retaliation that they're planning. The question is a retaliation better, or should they come to the negotiating table? And really, where the headache lies is with the Bank of England and with the Federal Reserve, specifically talking about that stuff. Basically the quote in the article is this: the Bank of England is going to face a dilemma. On one hand, tariffs are going to lift prices of some of the goods, and its core remit to keep a lid on inflation as close to 2% as possible, to which point rates staying higher for longer is most likely going to happen. Basically, most economists think that what's going to happen in England is that they're going to go ahead and do an interest rate cut, mainly because that's what they've signaled to the markets they're going to do. So this could be a reversal. And so, which again it's what in times like this is what you should do. Now, this is the other part, is quantitative easing, all the stuff that got us in the 2008 mess. Do we want to repeat that? Should we actually let the economy roll over? Who knows? But great article here. Let's jump to the next one. Staking on the tariffs. EV battery costs set for sharp rise on Trump's tariffs, with that 64.9% rate on all Chinese battery cells. Basically, the already slow adoption of EVs is set to even lower here in the United States. We also know that Trump has revoked the EV tax credit and signals a dramatic pivot away from all these EV policies. We also, the largest EV provider right now in the United States is Tesla. For Q1 2025, they reported 336,000 deliveries, which was well below the Wall Street consensus since of 377,000 and was as lowest since 2022. I mean, anything that gets imported is going to get hurt. Specifically EVs, which we make none of that here in the United States. We make very little parts for EVs in the United States. So any sorts of alternatives are going to get a heck of a lot cheaper at the same time when oil is now below $60. We'll cover oil here in a second. So, it's going to be super interesting. Basically, this push that we're going into the EV market, these tariffs basically add up to 100%. I mean, there's a 34% tariff that was already imposed on EV batteries, and now they're putting another 64.9. So I mean, you're basically looking at you're basically looking at 100% tariff. They claim this would add about $8 billion in costs for battery pack producers and EV makers, most of that flowing back to China. I mean, we do have a pretty large trade deficit with China, but the question is this really going to solve the problem? And I'll be the first to say, I don't know if this will. Obviously, the markets are getting absolutely hammered right now. Who knows what's going to happen? All I know is that I think Trump is between a rock and a hard place here, because if he all of a sudden comes out and rescinds these tariffs, then I think what you're going to then I think that he loses some theoretical credibility with when he comes out and says something. How are people going to be able to take him seriously? He's talking about tariffs for over 20 years now, really 30 years now, going back to the late 80s. And so really the question is, if he sticks with this, and obviously, this means we're in for a ride. So I would expect these to stay, but yes, everything's going to get a heck of a lot more expensive, specifically these EV batteries. let's jump over into finance, guys. Before we do that, let's quickly pay the bills. As always, thank you for checking us out here on the world's greatest website, energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit that description below for all links to the timestamps, links to the articles. If you would be so kind, go ahead and subscribe to our newsletter via Substack, theenergynewsbeat.substack.com. Stu is dropping some great subscriber and paid for only articles, so highly recommend you guys checking that out. Also, guys, check out Reese Energy Consulting. They're tremendous supporters of the show at a time when every dollar matters on your first purchaser in midstream context. They're your go-to folks, all of your midstream marketing. If you're in the LNG space trying to, at any point, whether you're an upstart trying to build a new LNG facility, thinking about expanding your global footprint, call our friends at Reese Energy Consulting, and they're gonna help you out with all of that. That's reeseenergyconsulting.com, or you can hit the link in the description below. And as always, guys, if you are interested in investing in oil and gas and truly becoming Billy Bob Thornton from Landman, go ahead and hit the description below, or go to investinoil.energynewsbeat.com, the best place to learn how to get a little bit of a monthly distribution. Basic, get a great tax write-off, diversify your portfolio, and also become Billy Bob Thornton from Landman. Guys, that's investinoil.energynewsbeat.com. I mean, guys, markets got absolutely hammered on Friday. S&P was down basically 5.9 percentage points, almost 6 percentage points. NASDAQ was down 6 percentage points. 2 and 10-year yields. 2-year yields was down 1.4 percentage points. 10-year yields down a full percentage point. Dollar index dropped about 0.3 of a percentage point. I'm recording this about 7 o'clock here on Sunday night, and futures are down about 3.8 percentage points below 5,000 for the S&P 500 futures. NASDAQ futures down 4.6 percentage points. Bitcoin down 6 percentage points below 79,000, sitting about 78.35. Crude oil, guys, take an absolute dump. It's below $60, 59.89, or down about $2.11. Even in the open that happened about an hour and a half ago. Brent oil actually fairly flat, which is, an interesting conundrum there. Natural gas down about 9 cents, or $2 or 2.3 percentage points, $3.74. Our XOP, which is our E&P securities contract, was down 10.6 percentage points on Friday, and I bet it closes below 100 on Monday as you guys listen to this, because the sell-off's going to continue. Really, this last 2 days has been crazy. If you've been following the business now for the last 2 days, basically on Tuesday, we were up over $72. And if you open your eyes today, we're now at $59, which is a pretty drastic swing. There's a lot that's going into it. I think the sentiment that tariffs are causing this, I think, is slightly misguided. I think tariffs are playing a role in this. But I think really what's playing a role is the fact that OPEC Plus has decided to go ahead and boost production on top of what they've already said they're going to do. They were already planning on increasing about 118,000 barrels per day. They come out and said, we're now actually going to add 410,000 barrels per day over the next couple months to the market in order to theoretically balance out overproduction and hurt the overproduction that's been happening from countries like Kazakhstan and Iran, which isn't necessarily included in all this, but that's the main cause, is OPEC's movement there. Now, it's oddly timed specifically with tariffs. And so I think the general tariffs are going to lead to a worse economy, which is going to impact oil demand. Couple that with increased supply from OPEC, and now you've got a recipe for some hyper bearish sentiment. I think the real question you've got to be asking is this for the long term? And it's possible. Everyone is revising their, output lower. Enverus, they went ahead and slashed about a third from its demand growth model. Basically everybody is cutting outside of them their global demand forecast by 50%. This is Al Salazar, head of macro oil and gas and research at Enverus. The moment the President Trump put the tariffs that were hammering on Canada almost 2 months ago, we already had downgraded our forecast. The timing on the OPEC announcement felt like them piling on. Is it piling on, or is it just they're trying to time it? The timing is interesting. I think the weird part to say is this whole drill baby drill. Well, that ain't gonna happen. There is absolutely no way we're gonna see a huge increase in drill baby drill. I mean, rig counts on Friday were down 2, which is we're gonna see a big negative number on that. There's absolutely no way we're gonna continue to drill. I mean, Rhett Bennett had a great LinkedIn post about this, talking about the idea of break evens. Everyone talks about, well, what's your break even? What's your break even? Well, nobody does anything to break even. You discount something on an NBV 10 basis and it's break even, you're still getting nothing. Now, there is a cash on cash component to this, but no one does anything. You need at least a 20 to 30% IRR for a oil and gas company to get interested. And so I think the part that is going to be really interesting is how low do oil prices go in the face of no new real supply coming on from the United States. Obviously, the supply is coming from Iran or from OPEC. And, to make matters more interesting, Trump loves this. I mean, Trump wants oil prices low. And that, ironically, he wants oil prices low, and he's got a huge constituency of people in the oil and gas business that enjoy him. And this is if we see sustained $55 to $65 oil, growth in the business is going to be tough. I think you're going to see people struggle a little bit. So I think the real question for us, and the real question that you need to be asking if you're an oil and gas producer is, at what price do I add, and do I go actually and attack my inventory? Everybody claims they've got inventory down to $45 break even. So theoretically at 55, would you drill? Maybe. So this is going to test a lot of those inventory assumptions, stuff that, Scott Sheffield mentioned 3-4 weeks ago. What happens? Those Double Eagle boys conveniently timed their sale as always. And it's going to be super interesting to see what happens, guys. I mean, we're going to be with this. I may have to tap in. I'm on vacation if anything crazy happens. But, oh, man, oil markets, guys. Why we love the business, guys. It's why we love the business. And with that, I'm going to go ahead and let you get out of here. Get back to work. Start your week. We appreciate you starting your week here at Energy Newsbeat. You will hear me and Stuart tomorrow. I will be off then Wednesday, Thursday. We hope you guys have a great week. We'll see you tomorrow.